Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Dream International Limited latest report. Dream International Limited offers a diverse range of businesses and services through its three main segments: plush stuffed toys, plastic figures, and tarpaulin. The company designs, develops, manufactures, and sells plush stuffed toys, which are likely to be popular among children. In addition to plush toys, Dream International Limited also produces plastic figures, dolls, and die-casting products. These products cater to a wide range of customers, from children to collectors and enthusiasts. The company's tarpaulin segment involves the manufacture of fabrics, which can be used for various purposes such as clothing, home decor, or even industrial applications. Dream International Limited also engages in other businesses, including the production of dyeing and fabric products, business color boxes and color books, and printing products. These services are likely to support the company's core product offerings and provide additional revenue streams. Furthermore, the company is involved in market research and support communication, which helps it stay competitive in the global market. The company operates globally, with a presence in multiple countries including Hong Kong, North America, Japan, Europe, Chinese mainland, Vietnam, Korea, the Republic of Indonesia, Singapore, and internationally. With its diverse range of products and services, Dream International Limited is well positioned to cater to various customer needs and preferences worldwide. Dream International Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Dream International Limited trades at a lower price-to-earnings ratio of 8 times and a higher price-to-book ratio of 1.24 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The balance sheet appears very conservative, with liabilities representing only 20% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 8.44%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth in the company's recent period can be attributed to several key factors. The plush stuffed toys and plastic figures segments saw significant increases, with plush stuffed toys growing by 18% and plastic figures growing by 1.7%. Geographically, North America and Japan regions experienced substantial growth, with increases of plus 16.4% and plus 22.3%, respectively. Additionally, the launch of multiple entertainment projects, surge in collectible licensed products, and growing popularity of tech-integrated playsets all contributed to revenue growth. Furthermore, the demand from theme parks in the Asian market, driven by rising visitor numbers and seasonal events, also played a significant role in driving revenue growth. On the other hand, the primary drivers of revenue decline were largely due to regional performance issues. The Chinese mainland, Europe, Vietnam, Korea, and other countries all experienced declines, with some regions experiencing significant drops in revenue. Specifically, the plastic figures segment saw a decrease of minus 0.5%. The financial performance of a company has undergone significant changes in recent times. A closer look at the net income reveals a decrease of 6.4% from HK $738,497 to HK $692,904. This decline is a cause for concern, as it indicates a reduction in the company's earnings. A deeper analysis of the profit margins also shows a downward trend. The gross profit margin has decreased from 23% to 20.2%, indicating that the company is losing some of its pricing power or efficiency in production. Similarly, the operating profit margin has dropped from 17.1% to 15.5%, suggesting that the company's operational costs are increasing. Furthermore, the net profit margin has also decreased from 13.6% to 12.3%, which means that the company is retaining less of its revenue as profit. The reasons behind these changes in net income and profit margins are not explicitly stated in the provided information. However, it can be inferred that the company may be facing increased competition, rising operational costs, or decreased sales volumes, leading to a decline in profitability. The company's financial performance indicates a positive trend in operating cash flow. The net cash from operating activities for the year 2025 was $203,931, which is an increase of $140,013 compared to the previous year. Similarly, cash generated from operations also saw a significant rise, reaching $134,119 in 2025, up from $111,219 in 2024. These figures demonstrate that the company is generating sufficient operating cash flow to support its business activities and investments. The company's financial health has shown significant improvement over the past year. One notable change is the decrease in debt level, which has dropped from $99.6 million in 2024 to $40.952 million in 2025. This reduction in debt indicates a more stable financial position for the company. In addition to the decrease in debt, the company's total finance costs have also decreased, falling from $6,560 million in 2024 to $6,206 million in 2025. Furthermore, interest expense on bank loans has seen a substantial decline, dropping from $816 million in 2024 to $442 million in 2025. These changes suggest that the company is better equipped to manage its financial obligations and reduce its reliance on debt financing. There is no significant activity to report on acquisitions and divestitures. The company has not engaged in any major transactions involving the purchase of new businesses or assets, nor has it sold off any significant portions of its operations. In fact, according to the provided information, there are no acquisitions or divestitures to note at all. This suggests that the company is maintaining a stable and consistent business strategy without making any major changes to its portfolio through external transactions. The company's financial history reveals a consistent pattern of dividend payments. According to the provided data, the company has been paying dividends in both 2024 and 2025, with an identical amount of $406,119 each year. This indicates that the company has prioritized returning value to its shareholders through dividend payments rather than other means such as share buybacks. There are growing concerns about potential disruptions to global supply chains. One key factor contributing to these worries is the fluctuating demand from the U.S. market due to ongoing tariff negotiations. This uncertainty can lead to supply chain disruptions, as companies may struggle to adjust their production levels in response to changing orders. Furthermore, rising trade barriers and escalating geopolitical conflicts are also causing significant concerns about supply chain stability. The ongoing tensions in the Middle East have led to increased oil price volatility, which in turn is driving up raw material costs. These developments can have far-reaching consequences for businesses that rely on stable and reliable supply chains. That concludes the financial summary for Dream International Limited. Feel free to comment below, and I will be happy to answer them when possible.